Good morning and welcome to another edition of From the Desk of Dan Moy. We're going to change up our format a little bit here today. First thing I want to bring up is Google reviews. A lot of you have given us Google reviews. We really appreciate it. We're trending upwards on our online data. So again, we have three separate spots. You can do that for Middletown. Dan and Andrew are your advisor. Glenn Mills for myself and Allison and Kirsten, and then obviously down in Lewis with Michael. So we really appreciate it. If you have a Gmail account, if you could go online and give us a Google review, it's really helping us out. So thanks again. All right, moving right into the market update. I mean, it's crazy. It's a bull market, you know. We just had 7 days of new all-time records, 7 consecutive days of new all-time records for the S&P and the NASDAQ. And this is the 37th, yesterday was the 37th record high of the year. So yesterday the S&P was up 1%, the NASDAQ was up 1.2%. The Dow Jones and small cap Russell 2000 were also up, which hasn't always been the case. It's generally been the S&P and the NASDAQ. But right now, momentum favors the bulls. And there's three catalysts for this bullish stretch. The first is the prospect of an easier monetary policy environment ahead. I mean, the CPI came out today. It dropped 1/10 of a point. It's down to 3%. Now, the Fed has consistently been on record as saying they want inflation to get to 2%. Now they're kind of hedging a little because the flip side of that is unemployment is ticking higher. And that's kind of what they want to see as well. But they kind of have a dual mandate, inflation and employment. So the Fed's view on inflation, unemployment, and the economy appears to favor the central bank lowering its benchmark lending rate later this year. It's what we call melt-up fuel. Meanwhile, the idea of President Joe Biden's name not appearing on the ballot in November doesn't appear to be hurting the market performance. The current streak for the S&P 500 and the NASDAQ began the day after the June 27th presidential election. So the idea of an extension of former President Donald Trump's tax cuts that occurred in 2017 is back on investors' mind, may be another catalyst for higher stock prices. Less taxes help businesses' profit margins and boost economic activity. And history is also on the market side in early July. The first 2 weeks of July is the best 2-week period for the stock market performance going back to 1928 on average. Why is that? Because money tends to flow into the market at the start of the second year of the year's second half for one reason or another, as institutional money managers deploy capital to start the third quarter or the beginning of the fiscal 2025 year. But all that being said, short-term steam doesn't last forever. The major U.S. stock market indexes are not going to go up every day through November or the rest of the month, even without any down days. It's not how the game works. And we're seeing a very similar setup from this time last year, right before stocks started selling off, before ultimately snapping back later in the year. I mean, the S&P 500 was up 16% in the first half of 2023. The market was climbing out of a bear market and things were looking good. And starting at the end of July, they fell 10% in 3 months. It was the first correction of the year. And this year is playing out in very similar fashion. So the S&P rose 15% in the first half of 2024. The bull run's on track. Is it going to continue or are we going to have that correction? And there's also a notable divergence between the headline performance of the S&P 500 and how most individual stocks in the index are performing. The underlying health or breadth, the number of stocks going up versus down of the S&P 500, there's more individual stocks in the S&P 500 that are going down versus up lately, while the index itself keeps going to all-time highs. This is typically a warning sign in an index or sector for potential weakness ahead. It has preceded drawdowns in the S&P 500 over the past several years. So put simply, if more stocks rise than fall, the number at the end of the day is positive and the index goes up. If more stocks are falling, the number is negative and it goes down. This usually goes hand in hand with the S&P 500. And with the U.S. benchmark indexes breaking out, this other index tends to follow, but that's not the case today. The S&P is hitting new highs, and yet the downers are versus risers are dropping. So it's another telltale sign, and it could be a benchmark for some trouble ahead. And just to wrap this up, I came across another article. One of the top analysts at Morgan Stanley is ringing the caution bell on the market as well. Mike Wilson said the third quarter is going to be choppy. There's good reason for investors to brace for the next few months. He thinks the chance of a 10% correction is highly likely sometime between now and the election. Your likelihood of upside from now until year end is very low. He put the odds of stocks finishing the year higher than today at only 20%. So and it's very calm right now. Very few traders are betting on a correction. And as well as I do, I've said this before, the markets tend to do what hurts the majority of investors the most. So when everyone is all in on the market, as we're starting to see now, it typically drops because there aren't many new buyers left to pop up the prices. And when everyone is giving up on stocks, they rip higher. Think back to March of 2020. And there aren't many today who are thinking about a correction. So my advice for you today, as far as the market, is prepare for volatility. Complacency is at a high today, and quite frankly, I don't see it lasting all that much longer. All right, so that's the market. A couple other things going on. I'll give you a recap of our 16th annual charity golf outing benefiting Granting Others Dreams. First, I want to thank all of those who joined us. It was a beautiful summer day, a little windy, but it wasn't as hot. So we raised over $23,000 in sponsorships. And after the expenses, we were able to donate almost $11,000 to Granting Others Dreams. So again, I want to thank everybody who participated and especially our sponsors. Our Blue Rocks game is coming up. Dan White and Associates Night at the Blue Rocks. It's going to be Friday, August the 16th. You're allowed up to 4 tickets per household, which we will pay for. You can get more. We're only paying for 4. Doors for guests open at 5 p.m. So we have a longer eating time, if you will. Game start is not till 6:35. So there shouldn't be any long lines this year, hopefully. Fireworks will be taking place after the game. To register, please contact Kristen here in our office. And then before you know it, we're going to have our fall referral event at Valley Forge National Park. It's a trolley tour. It's going to be on Thursday, October the 3rd. The private lunch, we're going to have a private lunch at Founding Farmers, and then a private trolley tour led by a park ranger at Valley Forge. So to qualify, again, this is not open to everybody. You have to qualify for this. You have to have a guest attend one of our dinner seminars or come in for a consultation. So they don't have to become a client. That's on us. It's not on you. But if you give us an introduction, they bring somebody to one of our dinner programs between now and October, or they just come in for an appointment, you get a ticket to go to our next referral event. And they're always a fun time. So please contact Kristen with questions on how to qualify. And then as a personal note, we have 2 birthdays coming up in my family this week. My son Justin has a birthday. My wife Cindy is 3 days later with her birthday. And my granddaughter Ayana is starting to walk. So, it's a fun time in the White family life. And, it's very exciting to see these things happen. So I want to thank everybody again for all that you do. We appreciate your business, and we look forward to talking to you soon. Have a great week.